Stock markets around the globe are in sync with each other in an important bull market run in 2020. In 2019, central banks, in a concerted effort, have gotten tremendous amounts of liquidity into the system, and with that, international stock markets are going up together. For a long time, they were not, but now they are. This has important consequences for the rotation of funds in and through the stock market and the real economy in 2020. So this could have an effect on the cost of labor. It could have an effect on inflation and raw and intermediate materials prices. And this is something that we're going to focus on intensely in the course of the year here in Power Charting. Hello, my name is Bruce Fraser. Welcome to Power Charting. Let's get started. The first thing we're going to do is look at the stock market. The Dow Jones Industrial Average here as our proxy for stocks. You can see that this is a rally in the stock market in the month of January, as we have had important momentum follow through after a very good rally really beginning in October. So we can see here in this upward trending channel that there is rising prices upward into a buying climax with a throw over of the top of the channel. And since that time, in the last 3 days, we can see that there has been volatility in the decline as it's come back from the throw over back into the channel. In this recently written blog, Dow Jones Industrials out of gas, here we can see a point and figure study, which was a reaccumulation which began in August and produced a count up to 29,509, 30,177. We have talked about this chart in prior episodes. If we go down and look at this vertical chart, we can see that there are two counts that confirm each other. There's the base count at the end of 2018, and there is the reaccumulation count, which is in August. And the first count was slightly exceeded, and I'll show you this in a minute. The second count has not quite been reached, the minimal objective 29,509, but you can see here that looking at this chart, that this peak right here goes to 29,373.60, and at that point it has turned back down into the channel. So there is increased volatility. The other thing I'd like to point out is that there's a volume surge that's taking place here on the declines, which is exceeding what has preceded it in the uptrend. So there is additional supply that is showing up, and I'm going to show you in a minute one of the reasons why, especially in the Dow, we're seeing this. Now, we would expect that this could return back to the demand line of the trend channel, and from there have another attempt at a rally, because there is a lot of momentum in this market. But if there is weakness that goes down to this level here around 28,850, then a rally, this whole area could begin to look like a larger distribution. And so we will definitely be on the lookout for that. Let's talk tactics for a minute. In this upward trending channel, we can see they really good rally from the October lows, and this rally has brought the market up to the top of the trend channel. These 2 points here are produce the demand line that we have, and then we draw a parallel from the intervening peak, and we can see that as prices have rallied up to the overbought line, that there has been an acceleration and a throwover. This is the area that we just looked at on the intraday, where we can all of a sudden see a tremendous amount of volatility developing as it's thrown over the top, which is a sign of exhaustion. So here, notice the volume. So we're looking at trying to eyeball the volume across here, and we can see that generally this is the average of the peak volume through this whole period. Well, notice that as we had the throw over of the top of the channel, that volume is now accelerating. This very high volume on this high bullish day is on a very tight range bar and is a sign of churning. So we have effort in the form of volume, and we have no result in terms of price movement. So effort without result. So the thing that we would look for here tactically would be, and this is where we were saying that we could have some kind of a distributional structure that could develop in this area, is a turn back into the channel. So if we see volatility expand, a return back below the overbought line back into the channel with wide-ranging bars and expanding volume, then this would be a sign that there is exhaustion present and the market is going to go into some kind of a probably a volatile pullback period and then a range-bound condition. So a little too early to tell at this point. We're not going to try to do point and figure counts yet for distribution because we don't really have enough data. We don't have completed distribution. But as that happens, we will work on this, and we will either do blogs or videos about this. To summarize, we have 3 conditions here that are at work. We have a stock market that has gone over the overbought line of the trend channel. We have a climactic surge that's taken place on the overbought condition, and we have 2 point and figure counts that are confirmed or have been basically reached at this level. Now we have some volatility off the peak, and we're seeing volume coming in, and we would then look for evidence of a return back into the channel with volatility and volume showing the presence of supply. So that's what we will look for next to confirm that there is in fact some type of a pause taking place here going forward. Let's turn our attention to this phenomenon of international markets. So back in December of 2018, I wrote a blog, International Intrigue, which you can see December 3rd of 2018, where we could see that there was an oversold condition in the market's downtrending channel, oversold, a throw under of the channel, attempt to rally. It came back. I'm going to bring this up to date in a minute. I attempt to, at the time, relate it to a US dollar that was, I thought at the time, had the evidence of peaking out. In fact, that was not the case. It still had further to go. But the analysis on the international markets did prove to have merit. So let's turn our attention to that. And so in this case, this is the EFA, and we can see that there was a large point and figure count that had been developed in 2016 back to 2015, and this count had resolved itself into an upward move. We had two segments. The first segment went up to this area of 66 to 72, fulfilled that count, and then produced a distributional structure that was countable. But there was a higher count that went 78 to 84, which was this second segment, and this count had not yet been fulfilled. So as long as you don't take out the lows of this count area, this count continues to have merit. Well, here we can see that this distribution count went down 60 to 59. It got within one box of fulfilling that the minimum of that count, and at that time, and then there was a second segment that went down 56 to 52. So remember that count, because here we can see it again right here. So 56 to 52. So here is what happened subsequently in the EFA. There was an oversold condition. It rallied and then came down into a shakeout. And this shakeout was all the international markets together, especially the US, just melting down into the end of the year. We can remember there was the Christmas Eve low in the US markets. Well, this was also the case in the international markets. This produced a shakeout and a V-bottom reversal. We've studied this repeatedly in the US market, but you can also see that this is the case in the the major international markets, which the EFA represents. And so there's this huge rally that occurred off of that V-bottom shakeout low that went up, out through the downward trending channel, and then a backup to test the channel from above, a rally, another test of the channel. And so what we have here is we have, in fact, we have an accumulation area, which we have counted in the US markets. Well, let's look at it in the international markets. And then we have a reaccumulation count. So let's have a look at this. So here is this area. So we can see this accumulation area here, which is the original 2016-2015 accumulation area that we counted, that went up to 78 to 84. And this count has not yet been fulfilled. So we can see here that as of the rally into the beginning of 2018, that it went up to 71. And then there is a reaccumulation count. This is the V-bottom low at the end of 2018, and then also a reaccumulation count. Well, let's take a look at those, because now all of a sudden we have international markets trending upward with the US market, which says to me that there is a economic recovery that's not just taking place in the US, but is taking place in the major markets of the world. This is really important, because if we're having a major recovery around the world and all of the markets simultaneously are going up, this is going to create a lot of cross competition for materials, for labor, for inventory, for capital. This could cause rates to go up. It could cause inflation to increase. This is the thing that could simultaneously, in a concerted way, cause the international markets to really heat up together with the US market. So looking at this, now we have the potential for these markets to all go up. How far can they go? Well, looking at the EFA, we can see that this base count goes 68, 88, 73, 39. Now what I've done is a daily, this is a daily chart, daily data, 3-box reversal. Box size is 0.41 because we're using ATR scaling. So we can see a count here at the, on the V bottom low goes 68, 88, 73, 39. Now we have a reaccumulation count. And the reason I take the count across to here is because notice the weakness from May down. There's really no lift in this market. It goes all the way down, sets a low, and then has a major rally, which shows that there's good demand under the low at $61. So this is where we want to start our count, or end our count actually. So we count from right to left, 7 columns. This gives us a count 69, 29 to 70, 93. Well, this count is a reconfirming count of the base count, and we are in the zone of that count now. So this suggests that this leg up in this rally is very close or near being completed, which our whole scenario, as we saw from the last video episode, is that the markets are going to go into some kind of a reaccumulation type structure, build further count for a more important move up. So here we can see that if we take this count all the way across, from here all the way over to here, this is 25 columns, gives us 30.75 points of objective from the low and from the count line. This gives us a count of 86.10 to 91.43, which is substantially higher than the current level, which is at 69.945, or call it 70. So we have a substantial potential for higher prices from here, even if we do have to go through some kind of a reaccumulation area for some number of months now that we have fulfilled these two accumulation and reaccumulation counts, and get a pause at this point. So this is a interesting place. There's tremendous potential. We may have to wait for another opportunity for the EFA to turn back up into the next leg of its uptrend. Okay, so here is an interesting stock that fits with this whole theme. This is a company, Albemarle, which we have done case studies on in the past in the Power Charting blog. And so let's revisit this stock again and have a look at its potential. Back in May of 2017, I did a treatment on segmenting point and figure counts. And the stock that I used at the time was Albemarle, and it had a great structure. It had 2 segments that were countable for an important base for a major move up. We'd actually done a blog prior to this back in April of 2016, and if you go to this blog, you'll be able to link into the earlier one. Well, this is the accumulation structure back in 2016, 2015, and you can see the 2 segments. And so these 2 segments counted up to 86 to 91, and then 110 to 115. And this was from a count line of 46. So the potential in Albemarle was meaningful. And here is a larger point and figure count with a reaccumulation structure in Albemarle, where here's the 86 to 91 count, which took it right up to the reaccumulation period where it had to spend some time building new count for a further move. The second count went 110, 115, but notice that the reaccumulation count went 120 to 125. And so a lot of potential in this stock, a major campaign in Albemarle, and we were able to get into this pretty early on after the completion of its accumulation structure. So go back and study this if you have time, but let's go and look at the present. The accumulation structure in the point and figure chart looks familiar. It looks very much like the prior one that occurred 2015, 2016. Here we are, this has taken place in 2019. A very large count has generated in a relatively short period of time. I'll show you the vertical chart in a minute. But we want to look at this in segments and see what the potential is. Currently, Albemarle is around $81. It's jumped up and out of its accumulation structure. Let's have a look. Here is the first segment. We can see 19 columns. This is traditional scaling. Gives us 57 points of potential off of a count line at $62. So even though we've had a rally up to 81, we can see that the potential in Albemarle is substantially higher than where we are. And in fact, this counts up 115 to 119 just on the first segment. So there is a tremendous potential from here even on segment one. Now, Albemarle is a big chemical company. They produce, are among the largest producers of lithium. And we know that there's just been a tremendous move in Tesla. Tesla is in a incredible bull run currently. Stocks like Albemarle are going to be in demand because of, again, this whole idea of this international recovery in not only the stock markets, but also in the world economies, and materials prices are liable to go up as a result of this. And this is certainly one of the chemicals or one of the materials is going to be in very high demand going forward. And so to see this accumulation structure in Albemarle is not a surprise given conditions in the world at this time. So let's look at the second larger segment. And so we can see here that the second segment goes 29 columns and produces 87 points of accumulation potential from here. We're not going to flag this at this time. We're going to concentrate on the campaign up to 115 to 119 and then focus on the next segment once we get up there and see what kind of a accumulation that we have at that time, whether or not we have to go through another reaccumulation period. Here is the vertical chart. This is weekly. You can see that the downtrend is being broken on a very high volume bar that has jumped above the downtrending line. And this is liable to have some kind of a pause in here, which would not be surprising, but also notice the relative strength is now jumping above its long-term moving average, which notice back in 2016 when this happened, that we had almost 2 years, or let's call it 2 years of relative strength outperformance in the stock. in an uptrend before it went into a 2-year downtrend. And here we are again, just on the verge of confirming a new relative strength uptrend as the stock simultaneously is jumping above its downtrending supply trend line. And so, and at the same time having a major accumulation structure that has built in 2019 with count potential. Okay. One last thing that we're going to do here before we end. Boeing is a major reason why the Dow Jones Industrial Average has been weak. Boeing is very important to the Dow Jones. On May 15th, I wrote a blog about this and went through the math of the Dow being a price-weighted index in comparison to a capitalization weighted index such as the S&P 500. Boeing is the highest priced stock in the Dow. At the time, you could see here that Boeing had an upthrust above its resistance line and then had come back down with volume back to the line, paused there, and then broke down into it. I said at the time that this was an LPSY and that Boeing could have an undue negative influence on the Dow going forward because of the presence of supply and seeming distributional characteristics. So let's have a look at Boeing now. And you can see here that Boeing, here is the LPSY. We can see that there were attempts to get back above the resistance area. It couldn't stay above. Also, at the time, here you can see that there was an attempt to come down, but actually spread diminished, volume was low, there wasn't supply present, a better rally above resistance took place. This time it came back down, and notice that as it did come down, that volume surged, which showed that supply now was present. So this next rally is a rally that came on relatively low volume. The highest volume in the rally came on this supply bar that ended the advance. It turned back down again, and this time you can see this just high volume, high spread decline that has now shown a sign of weakness and taken out the support area. The other thing I would like to point out is that look at the relative strength. The relative strength after the upthrust, after distribution, has been persistently below its moving average and has been weaker and weaker throughout. This is a sign that institutions are reducing their exposure, their holdings in Boeing systematically because Boeing is no longer helping them and helping their portfolios. They probably will never get out of Boeing, but they will reduce their position, and the net effect of that is that Boeing is becoming an ever weaker stock on a relative strength basis. And on that, I'd like to say thank you for being here, and we will continue to look at the international markets in more detail going forward. Thank you for showing up, and we'll see you next time.